Hello, welcome to the Victor H Investing live stream. In this live stream, we're going to talk about stocks primarily. We're going to go over how the stock market performed this past week, see what information was revealed that's going to help us plan out next week. The intent of the live stream is just to go over the stock market and teach, learn, pass along useful information for investors to use as you manage your investments. So let's take a look at a couple of things to get going. Just let's see where the stock market was last week and see if we're picking up on any trends that are going to be useful to us as we approach the end of July. So the market last week, the Russell 2000 outperformed the S&P, the NASDAQ, and the Dow. And it's been a while since that happened, but it's good to see that the Russell's stepping up. It had been underperforming for a long time, so it is good to see that. And I'm looking at the last 5 days of trading. Hey, Shadow Guy, thanks for joining. And so when we look at a couple of things, I'm going to go 1 month, and you can see that the Russell has had a very good July. And I think it's that the expectation that interest rates are going to continue to fall. So it's made smaller cap stocks more attractive. What we're also seeing is it's a pickup of a trend that there may be a rotation of capital, investors selling large caps, investors selling some very high priced technology stocks like semiconductor stocks, selling those stocks, and then moving either to cash or moving into small caps. Small caps have been really low priced, so it's a pretty good opportunity to buy some of these, very good metric driven, good fundamental stocks in these small caps. So that may be a trend that continues on. I'm looking at it closely to see, do I want to keep buying into these small caps? I started buying into a couple that I hadn't been in before. I had a video on small caps. I think I released yesterday, and I revealed, I think, a couple there that you can take a look at. Over the year to date, it's still, the NASDAQ has, the best performance for the year, but it's not, you can't invest and look in the rearview mirror and say, okay, what worked in the past is what's going to work in the future. It certainly might, but you can see that the NASDAQ is the leader of the pack, but it has really seen a decline in stock values that are in the NASDAQ. So is that a trend we're going to pick up on? Also, the Russell, you can see in the dark blue line here, you can see that the Russell really took off in July. So is that trend going to continue? Well, we can make money if we pick up a trend early and then go to where the trend is headed. If small caps are going to perform, great. If other sectors are going to perform, awesome. I want to buy some stocks or buy more shares in stocks that I already own in those sectors. That's where my head's at. That's where I try to go as I look at the data that the market's telling me holistically. Other data points that are out there. So this past week, we had the economic data, and the U.S. economy grew at 2.8% in the second quarter. And that was higher than what was being reported. And 2.8% growth rate is good. That means the economy is growing. I don't know that there's, a lot of news out there that says, oh man, we're in a horrible economy. I think the news predominantly was prices were too high. Inflation did go up, and you can really see it in people's lives. But with regards to people being employed and the economy, it's growing. So I'm sure some sectors are growing better than others, but in general, that was a bit of good news that, hey, the economy is doing okay. The other bit of information is the PCE, the producer cost index. Its inflation went up 2.5%. Now, if you Go back over the last 2 years, inflation was upwards of 10% for a while. So getting to a number of 2.5%, this is a number that the Federal Reserve uses in their decision making. That's very good news. And I think that's what led to the rally that we saw on Friday. I think that um, now that we see that inflation has come down, the measures are showing that, hey, inflation has eased. The expectation that interest rates are going to go down, that I think some of this consumer tension and really, frankly, the inflation was consuming a lot of dollars. It's going to get a lot better. So those were two good pieces of information economically. So we're seeing a shift in investors moving from, stocks that have done really well, right? If you're sitting on technology stocks with a big gain, there's nothing wrong with taking the gain. I took gains on Broadcom. I took gains on Qualcomm. I took gains on Amazon. In a way, it was a little bittersweet because I saw those stocks continue to rise. But that's, the reason I took those gains is I don't want to be greedy and be sitting on these stocks when they start to decline. I'd rather rotate into something else. And at the rate where you're getting paid on cash, which is 5% roughly, that's a pretty good rate to sit on. If you're sitting on a really good gain and then you can move to cash, nothing wrong with that. And then you can take that cash and maybe deploy it into either small caps or sectors that are about to take off. Looking at sectors that are about to take off, I'm looking at a ranking of sectors, and sectors are pretty much all the stocks in the universe, right? If you took a pizza and you started to slice it up, you'd have different sectors, and they all make sense, right? Like all the stocks that belong to real estate, all the stocks that belong to financials. Industrial is a little fuzzier, but you can study that up and understand it. Utilities, the power companies, and so forth. Now, when I rank them, and I'm ranking based on the monthly performance of those sectors, real estate is on top. And you can see how interest rates really affect those stocks. If they have to borrow at a lower rate, it makes their ability to buy more properties and rent out and manage more properties much more possible, makes them more profitable. A lot of good things happen for real estate. So it went up about 7.87%. Now, the thing I would also make sure that we understand is year to date, it's not doing great. 1.67 is terrible. So I haven't been heavy into real estate with regards to my stocks. I own residential real estate as an investment, and that's completely away from the stock market. So real estate does matter to me, but not with regards to real estate stocks. Now, I'm going to dive a little deeper on real estate, but just to kind of finish my train of thought with regards to sectors, the reason I look at sectors is you see this trend. You got the last 30 days, we got technology stocks that have been selling off. Makes sense. Investors are sitting on big gains and they sell off some of their technology stocks. So putting more money in technology, I think right now is a little risky. Communication services, that's where Alphabet, Google, Netflix, Meta, Comcast, Disney, that's where those companies reside. It's down 2.63%. And then just consumer discretionary is down just a bit. But you can still see that year to date, both those sectors have done well. But the trend is that maybe some money is leaving that space. Now, coming back to the top, real estate did well. Financial services has been doing really well for about a year. It's sitting on 15.45% year-to-date yield. That's been really good. I've got a good investment in financial services. I continue to buy on dips and so forth, but I think I'm good there. It's a really good space to look at. Industrials is a big opportunity for me. And the reason for it is industrials is kind of a pretty broad dispersion of types of companies, if you ask me. And I think that there might be an opportunity to look into that sector and maybe find one or two more companies. I started buying into Halliburton And the video is recorded and scheduled. You'll see it in 2 days, maybe 3. And if you recall last weekend, a viewer of this live stream came up with the symbol Halliburton, HAL. And I looked at it. It's an industrial, and I really liked it on the live stream. So I did, deeper analysis, more homework, and it's just too much value to walk away from. So I started a really small position of Halliburton, and that's kind of growing in a space that I think is going to do well. If the economy is doing well, 2.8% growth in the economy, we're probably going to have certain sectors begin to bounce back. Real estate is doing better. They're going to start building more, remodeling more, and probably buying a bunch of stuff from the industrial companies. Companies like 3M. 3M had a phenomenal day yesterday, to say the least. They were up almost 23% one day. So that's where I'm looking the sectors. Once we get into the middle, not a lot of interesting stuff, right? But just diving deeper into real estate, let's dig into that guy first. And if we look at real estate, the biggest holdings, and this is an ETF, and the biggest holdings it has is Prologis, which is predominantly they own assets that are like warehouses, distribution centers, logistics centers. And those definitely are important, right? It seems like we buy most of our stuff online these days. So that's the top holding of this ETF. You have American Tower that does cell phone towers. As we drive around and use our phones, we're using these towers, and the owners of these towers charge the carriers a fee as users of their services use those towers. Equinix is a data center company, and so forth and so on. Here's Realty Income. That's a pretty popular REIT that pays a dividend every month. Public Storage, I've been tracking for some time. It does storage of like your, extra stuff. Digital Realty specializes in data center assets. It was a good opportunity in 2023. It is one that got away from me. I bought the stock. I sold it because I just wanted to get out of real estate a bit. And then the whole data center AI hype took off, and this thing's up like 50% from the time that I looked at it. So this is where, some companies, it looks interesting to look at these companies. Are these companies in real estate going to continue to do better? Potentially. So going to Prologis, if you look at their 1 month, they're up 11%, but year to date, they're down 8%. So hasn't been a smooth ride in real estate, to say the least. It's been kind of a rough ride for them. I'm going to switch over to my favorite app to analyze. And you can see that, hey, they pay a nice dividend. They're kind of on an upswing here. I'm looking at the year to date. If you look at the year, you can see that these stocks, for me, it's about finding quality companies that are worth investing in, and then investing at the right time, and then buying during these really low periods, and then watching the stock rise. So this company looks pretty interesting. I think I'm going to take a deeper dive into this one. I haven't taken a deep dive. I have taken a deep dive into Vici, and Vici is, this is one that maybe I should have bought it a month ago, but it really took off with all the news that hit. It's up quite a bit. But for the year, it's down 6.85%. So this might be a sector that, hey, it could give a pretty good yield over the next year to 2 years if the economic situation continues to follow the path it's on. So that's what's been going on with sectors. I wanted to talk about crypto. Before I do that, let me just say hello to everybody. So again, good morning, Shadow Guy, Earthbound Misfit. Thanks for tuning in. Bad Omen, the Family Guy. Thanks, guys, for tuning in. I appreciate it. Keep the questions coming. I'm going to get to them. We'll take a look at stocks that the group wants to take a look at, and we'll go over topics that the group suggests. All right. So now I'm primarily a stock investor, but I began to learn more about crypto some time ago, and I started to invest small amounts. And over time, I just continued to invest a little bit. And, some people just hate crypto. They fear it. I understand, if it's something you don't understand, you shouldn't get into it. But I just wanted to show you the performance of this darn thing. So over this past week, it did quite well. The BTC, the Bitcoin went up 2.4% over the last month. Bitcoin was up 13% year to date. It's up 56%. And I know that everybody's going crazy about, NVIDIA, Meta, and so forth. But Bitcoin's been right there with those stocks. It's been a really good performer. Now, it's not the biggest investment in my portfolio, but it is a hedge away from stocks. And the more I learn and the more I understand it, the more comfortable I am with the investment and my belief that, hey, it's probably going to be a bigger part of our economy. I created a Discord server and I put some channels in there thanks to the help of some of the community members. And I did put a crypto channel in there. And I put a link to an episode of The Compound. And they had a ETF manager who created an ETF around Ethereum as well as Bitcoin. And believe the ETF is Bitwise. And I really liked the conversation because it was 3 stock investors who talked about crypto. That's perfect for a guy like me. That's like, okay, they talk my language and they rationalize the investment in crypto. And one of the attendees was pretty bearish on crypto. He's pretty much like boo on crypto. And that's good because it makes a really good debate on that video. If you want to look at it, look at the Discord, take a look at the video, and just stay informed, because if this thing like Bitcoin, right, if it really continues to go up and up and get established as the global stored value digital currency, it's going to continue to just gain great value, as well as Ether being a really good platform and network for international transactions to happen. That also has a lot of potential. So I just wanted to throw that out there that, yeah, we had an interesting week in stocks where we had, the Russell 2000 really taken off. I'm keeping an eye on my crypto because it's been doing well. And the best investment that I can make is investing in my knowledge, right? Just keeping current, is trying to stay informed. I don't have to put any capital into that investment, but the worst that I could do is learn something. And maybe I learn that I don't want to be an investor and I stay away from that investment. But I want to continue to learn on crypto, even though some concepts around it are completely foreign to me. It gives me an opportunity to really put myself out there and learn something brand new. So I wanted to put that out there to the community. All right, so let me catch up on comments, then I'll get into some stocks that I thought were interesting to take a look at, and I want to look at some stocks that you guys want to look at. So Shadow Guy, very good to have you. One worry I have is I saw the dollar get hammered the past few years relative to the euro. With the Swiss franc, makes me think inflation in the U.S. is worse than they say. Not sure what y'all think. Yeah, I think the foreign currency Forex is not my primary lane. I know other investors really focus on that. I don't know if you guys have any comments you want to put in the chat. I can't add a lot to that question. For me, the one thing I would say is I traveled to Europe. I took my family, I'm going to say about 18 years ago, family of 4, went to France for 2.5 weeks. Had a great time. And then I took my wife to Italy this past summer 23. Had a great time. Spent 3 weeks in Italy. The cost of that trip to Italy was less expensive than it was 18 years ago. And I went back to Europe in 19. And I think the cost on each trip continued to go down. The reason for it is 18 years ago, I think the US to euro exchange was you'd have to pay $1.36 or so of dollars to get to €1. Well, now it's close to 1 to 1, or if anything, the euro's below the dollar. So it makes the dollar more stronger, and it made it less expensive. But with regards to, I'm mostly invested in U.S. companies, so I don't look at foreign currencies a whole lot. It just I don't have that's not a big factor in my decisions. Bad Omen, thanks for joining. The Family Guy, any small cap ETFs? Yeah, I would say that it's a really good idea to look at ETFs that look at small caps. I'm sure platforms like Seeking Alpha could get you to small caps. And I don't know if they have it here, but we can definitely find small cap ETFs. And I don't know how to tell you if they're undervalued. I think when you invest in ETFs, my thought pattern, and maybe other people treat it differently, is that you look at where the market's going, you look at trends, and then say, hey, I want to be invested in small caps. And then you pick, a good ETF that fits what you're trying to take advantage of. And if it's a trend, secular trend, you want to jump on that. The important factor is, keep the expenses down. You don't necessarily want to pay a lot of expenses because you're kind of giving away any gains, or worse yet, maybe the ETF value goes down and the value of your ETF went down, and you paid fees, which is even worse. So keep that in mind. But I don't know how to value them and say, hey, this one's undervalued or overvalued, because there's too many moving parts. They own so many pieces. It'd be really difficult to do that. All right. So Randy, thumbs down on crypto. Totally understand. A lot of people feel the way you do. Let's take a look at here. Learn with me. Could you please cover ASPN? I think ON is a semiconductor company. Okay. ESPN, ON, and UPS. Yeah, UPS announced, and if my memory serves me right, they announced and the stock went down. So we'll take a look at that. Let me catch up with some more comments about some Visa. Cool. Yeah, Visa's, man, talk about beautiful financials. You see their revenue growth. You see a lot of things on Visa. It really, why investors love Visa is that consistent growth. So I can understand why that's really a good investment, or a popular investment for a lot of people. Mercadolibre, let's take a look at that. That is a high growth company. And I'm not going to call them a small cap, but let's take a look at it. I think it'd be interesting to look at that one. And Kidder, hello, sir. Yeah, cool. I'm glad you're reading Irrational Investing. I think, again, that's one of the more famous authors, and I think it fits the time. I believe that. I think in some sectors there's been some irrational exuberance, where, hey man, Nvidia's just going to keep going up because it's been going up. Maybe they're right, but I think it's just irrational exuberance in some places. I don't think it's super overheated, but I think the market is expensive and certain sectors are overheated. Any thoughts on AST Spacemobile? Let me take a look at that one. We'll take a quick glance at it. Cool. Good to hear from you, Shadow Guy. So Randy A. So here's a suggestion for you. If you want to read it, Family Guy, there's a suggestion. And then bought some Pfizer. Okay. Bristol Myers did really well yesterday, and it gave a little fuel to our friends over at Pfizer. So I think the healthcare space, if we go back to, and I got away from the let's take a look at that really quick. So if we look at healthcare, Healthcare has underperformed, but historically, this is only going to go back 1 year. But if you look at the 5-year performance of healthcare, it's a really good performing sector, and you know why is because you get companies that have patents on these drugs that people need, that these drugs really save lives or improve the quality of life for a lot of people, and they become really valuable companies. And healthcare, for some reason, over the last couple of years, just been underperforming. It's been underperforming, and I continue to expect at some point it's going to break out and do well. We may be seeing a little bit of that. Bristol Myers really had a good day yesterday. I think Pfizer, it's upwards and onwards. They had a really tough compares because during the COVID years, they had they sold so much COVID vaccine that it really ballooned their income statement. And then the next year was really hard to compare to that statement. But those years are behind them now, and their compares are pretty reasonable, and they're showing really good revenue growth. All right, so we got through that. Let me close out some screens here, and then we'll start looking at some of these companies. All right, so let's take a look at ASPN. I've never seen this symbol, or maybe I have and I forgot. ASPN Aerogels designs, develops, manufactures, sells aerogel insulation products primarily used in energy infrastructure. Okay, and it's an industrial, and it's a building product. Okay, so I let off kind of talking about how industrials are catching my attention. These guys are doing insulation. I'm sure they're using some type of chemistry to, have a good insulation. The stocks really had a lot of movement. It looked like it was super hot in 2021. It was priced at $62 a share. Now it's at $21. It has recently seen a pullback, a pretty good one, from $27 to $21. And they announce on August 7th. So the earnings is around the corner. A lot of analysts, or some analysts, cover it, and they say it's severely discounted. Very good. Interesting. They have a forward P of 105. So I imagine this is a newer company. Let's take a look at their financials. Really nice growth. It's a small company, but it's an industrial. It's a small company. We know interest rates are low or going lower. We know real estate's kind of, catching a lot of tailwinds. So that's good for this type of company. So that's interesting. Quarterly, man, look at this quarter, 107% growth. I really like that growth. Now, when it comes to a growth company, they may not be the most profitable company you look at, but that's understandable. If you look at Uber, Google, Amazon, all those companies in the early days, they were not profitable for a long time because they continue to grow. And they're like, hey, we got to buy all this infrastructure to continue to grow. And when we depreciate that infrastructure, it costs, it really takes our profitability to a negative level. But if you continue to grow at these rates, the market's going to notice, and people are going to ask you to continue to grow. Let's look at free cash flow. So they are burning cash. Okay. So they're a cash burner, but the good news is they are burning less cash over time. I'm looking at the quarterly. Let me look at the annual. And if we look at cash flow again, so they're growing in 21 to 22. They burn more cash, 23, less cash. Okay. They are burning a bit of cash. Let's call it, they're burning $200 million of cash each year. Now, looking at their balance sheet, they have $100 million of cash. Long-term debts, 100. Let me look at total debt. Total debt's 146 million. Not a ton of debt, but the concern is, are they going to run out of cash? So they're burning cash. They don't have a ton of cash on the balance sheet. Are they going to issue out more stock to try to get more cash on the balance sheet? Let me look at their EBITDA rate. So their EBITDA, see, they don't have any positive EBITDA. Earnings before interest, tax, and depreciation. So they're not creating positive cash. They have a low cash position and they're burning about 200 million in cash. That is what may be weighing on investors as they look at this stock and say, okay, I'm afraid that their balance sheet cannot hold their growth. And they are a small business. So I'm going to have to pass on this one. It's just too much risk. Usually I wait for a company to show me they can produce cash. You don't have to show me profits, but you got to show me that you can sustain yourself. You can, go year to year and continue to grow if you have some positive cash and you have a okay balance sheet. Because if a company's producing free cash flow and their balance sheet's in good shape, chances are they're not going to go out of business. But if they are burning cash, the chances are there that they can go out of business. So I'm going to have to pass on that one. I'm going to kind of circle the field a little bit. I'm going to pass on and UPS for the time being, but I'm going to head over to Visa. So Visa is, when you look at Visa and you look at their financials, I commented that it's very respected how they just continue to grow their top line. So their network continues to just grow revenue. And I think that's why this business, when investors look at it, they really invest in it. It's a $513 billion company. That's a huge company. They pay a small dividend. Analysts say that it's a buy and it's 17% discounted. It has had a pullback over the past month. The year to date is flat. Interesting. It's been kind of declining. Very interesting. Over the past year, you've seen a decline. Okay. Very interesting. But over time, if you bought Visa, 5 years ago, I think you're a happy camper. It's gone up nicely. But it's interesting that over the past year, you've seen a decline, especially year to date, you've seen a decline. If with an investment like Visa, it's a massive cap, right? It's a big cap. I go to, what are these trends, these secular trends that I expect? Well, Visa makes their money by, just kind of simplifying it, is when people buy with their Visa credit card, either in person or online, roughly 3% of that transaction is given to Visa. And then Visa pays for the network and all kinds of stuff. Now, it could be negotiated, but I'm not going to get into that between the merchant and Visa and so forth. But just simply, that's where the money's at for Visa. Now, obviously, with COVID especially, people bought more things online, and the method of payment has been credit cards. Now, the big threat to Visa is stable coins that are a cryptocurrency. Stable coins, the whole platforming of crypto, is to basically create networks that are pretty much no cost, very easy to use, or I should say less expensive to use. And if merchants, if you think about Starbucks, and I don't know if you have a Starbucks app on your phone. My wife does. She loves Starbucks. And she loads it. She can load it from her bank. She can load it from a variety of means. And once that money is in her app, she can buy drinks, beverages, food. She gets rewards and so forth. That is kind of a representation of a stable coin. That's where Visa is vulnerable. If more and more of these big merchants begin to say, hey, instead of having Visa in the game and taking 3%, how about if you have a direct account with us, an app, you link it to your bank, no fees involved there, and then we give you a discount, 2% or 1%. You do that. You see that on gas stations, right? Like when you go to a gas station, you pay cash, you get a discount versus credit card. Some credit cards themselves give you a cash back reward. They're doing that because there's margin that's being given away. And that's one thing to keep in mind with Visa. I'm not a Visa investor predominantly because I think those are risk factors that I think over time, Visa is going to be vulnerable. Visa is going to have to kind of disrupt themselves, or somebody's going to disrupt them. The technology they came out in the 60s. And, Visa is a great company. It's been a great company. But 3% of every transaction, that's just too much. I'm sure that Amazon's got a plan to take that margin. I'm sure that other big vendors and merchants have a plan to take that over. But nonetheless, I think if you valued this company, it would probably be fairly valued, or slightly discounted probably. And really, but I think my rationale would be, where do you think Visa is going to be in 5 years and in 10 years? That's the big picture concept. I think if you look at what I created with the the quadrants of desirability, where you have companies that have these strong barriers of entry, Visa is most definitely in the green. Okay. But it doesn't mean they're going to be there forever. I think over time, Visa is going to be straddling two of these quadrants where, yeah, they do have competitive advantage because they're still the popular credit card, but they're moving to the gray because they have new competitors, new technologies that are disrupting them. So keep that in mind. Those are my comments on Visa. Hopefully you found them interesting. All right. So catching up on some comments. Scott with Scott's Due Diligence. Thanks for attending, and thanks so much for the $20. I appreciate it. I'd love to do a live stream with you. And I'm sure many of you already know Scott from Scott's Due Diligence. His channel is excellent, and he's put out content. I've been watching his content for 4 or 5 years, and I've probably watched, I don't know, 1,000 videos that Scott's produced. And that's not an exaggeration, by the way. He was kicking them out every day. So thanks so much for joining, and would love to do a live stream with you. And if you can join tomorrow, we're going to do the second episode of our video conference. We got on a video conference and we talked about, trends we're seeing, topics that were determined for the group to talk about. It was a really, really good conversation. Tomorrow, we're going to have another session. I thought we could talk about sectors because it was a topic that people wanted to talk about, but we didn't talk about it last week based on the poll that I took a week and a half ago. And we could talk about stocks and kind of talk about the week to come and what we expect is going to happen. It's going to be a huge week next week, by the way. We have big earnings coming. We have some big hitters coming next week, where we have Microsoft on Tuesday, huge. Procter & Gamble, big. Merck, AMD, Pfizer. I mean, Tuesday, holy smokes. I might do a live stream if I can on Tuesday afternoon. Starbucks. I mean, these are going to be, it's going to be a huge day. Monday is going to be somewhat large, and On is on here. I think we're going to talk about On a bit. But Tuesday, man, look out. I think the market is going to have a lot of information to process. And then Wednesday, we got Meta, MasterCard, Qualcomm, ARM Holdings, which is an IPO that came out a little while ago. So Wednesday is going to be interesting. Not as big as Tuesday. And then Thursday, Apple, Amazon, Toyota, Intel. It's going to be a huge week, man. The Tuesday, Wednesday, Thursday. And right when you thought, hey, we've seen a lot. Let's talk a little energy. The big players in energy, Exxon, Chevron, will tell us, hey, this is where oil prices have been. This is how much money we made. So it'll be kind of Energy Friday. So next week's going to be huge, man. Take your vitamins, get a good night's sleep every night, because it's going to be rocking and rolling time next week. It should be a really, really interesting week. We saw the stock move quite a bit this week, where you had the S&P as an example. Over the last 5 days, you saw that we ended in the red for the week, and you had the market really dive on a few sessions, and then it came back on Friday. Well, that type of volatility kind of tells me that the sentiment out there is that investors are going to be quick to sell. You saw it in Ford, which sold off big on Thursday, and it hurt my feelings because I was a Ford stockholder. You saw, man, if you saw Dexcom in the pre-market, it was down 40%. It ended Friday's trading down 36%. Oh man, that's brutal. So the market was quick to sell off, and it's interesting to see that a couple companies like Bristol Myers had such good days. But I think this volatility going into next week with so many earnings, big things can happen. Just total guess, but I could see that we can end next week, the S&P down 5%. If we get bad earnings from one of those big giant companies, it's going to take the market down. It's going to continue this trend. And we don't have any economic data next week. But if on the flip side, if you have positive earnings, we'll see how high the market can get. But I think we're stepping into a really interesting week. All right, so let me catch up on comments. All right, so we talked about Pfizer to some extent. I'm going to talk about Bristol Myers, and I'll talk about Pfizer when we cover Bristol Myers. And check on CRM, which is Salesforce. And I do have comments there. I think it might be an opportunity to look at software companies because, it's software for some reason. It has kind of been left behind and forgotten. It's been all about semiconductors. Man, they're going to build out the data center. They're going to make so much money. And they forgot about software companies. Then CRM might be a pretty good opportunity. And, Scott, love to do a live stream with you. You tell me when and I'll be there. You bring up a good bearish point on Visa. Yeah, that's, be the investor that fits your personality, your knowledge, your skills, your passions, what drives you, right? One thing that I've always been, even as a youngster, is I loved economics courses in college. I have a undergraduate in accounting and I have a master's in business. And when we talk about these big concepts, it was just like so interesting to me. So I really like to think big picture and understand, this company operates in this sector, and this sector operates within the economy in this capacity. What are the things that are going to help them and hurt them? So, those are the things that I like to get an understanding of that and put it into kind of a rational, how strong is this company? Do they have competitive advantages? Do they not have competitive advantages? And that fits who I am, right? That's what I love to do. That's where I think I bring the best knowledge to my portfolio. And from there, then I step into fundamentals. And with channels like Scott's Due Diligence, I was able to really get to a model that I believe in, which is exactly, this is my investing criteria. And then I make a decision on the company. But it starts by really making a decision on the company and that I believe, hey, they're in a really good space. And I'll give you another example, Uber. I believe ride sharing is just going to continue to expand. The addressable market continues to expand. And they're going into food delivery. I'm getting Uber messages where returns, you can do your returns. Uber driver comes, picks it up, takes it over to Amazon, that kind of thing. So you could see that the secular trends for the sharing economy continue to expand and disrupt other sectors. And that's kind of a big picture item that I use when I invest in Uber. It's not all numbers. You got to know, from my perspective, I have to know, is that economy for that sector and that industry going to continue to get better, or is it going to continue to get worse? Example is, let's say, video rental. Video rental like 30, 40 years ago was super popular. You would have video rental locations everywhere. But about 20 years ago, everybody understood we're going to streaming. And that whole space just shrunk quickly. And Blockbuster, as an example, doesn't really exist anymore. They were humongous at one point. So you want to catch those trends and say, hey, I don't want to buy the next Blockbuster. I want to buy the next Netflix. I want to watch somebody who's expanding versus contracting. So thanks for the comments there. Hopefully you found it useful. All right. So I may have kind of missed a comment or two, but let's see here. Okay. I think I'm good. All right. So, yep. So good there. FedNow payment system will take away from Visa. That could be it. I think, when you have a network like Visa has and that whole 3%, I think it's vulnerable. It's an old technology. It's an old paradigm. It's an old, concept. That's the opportunity. Is their margin is everybody else's opportunity. And I think alternatives will continue to come up. Some of them will stick, some of them won't, and we'll see what happens. All right, so let's jump into a couple more stocks, and we'll pick up with Mercadolibre. So this is, I'm going to oversimplify, but this is the Amazon for Latin America. They really cater to Latin America, and they probably do things in those markets that really fit those economies and the way people like to buy things down there. So we understand what they do there. It's a market cap of 83 billion over the past year. It's been kind of going sideways for 24, and it had a really low point here not too long ago in April. We had that 5% pullback in April, if you recall. So it had a pretty good pullback there. It hasn't been rallying lately. Now, when we look at their revenue, really good growth. They keep getting bigger, so the growth rate continues to get smaller because this number just keeps getting, the law of big numbers is the number gets bigger and bigger and bigger. It's hard to put the same type of growth rate. Looking at the quarterly growth rate, yeah, it's slowing down, but nothing too much to worry about on the growth rate. All right, so they're growing their revenue, very good. If we look at their free cash flow, man, look at this free cash flow. Man, that looks great to me. So if they're doing $5 billion in free cash flow and they're growing at 36%, so I would say their market cap, if I did a full valuation, is going to be in the neighborhood of 125 to 150 billion. Let's do that for this one because this is a high growth company. It's interesting. But before I do that, I'm going to check their balance sheet just to make sure that it looks okay. So they have $6.2 billion of cash and short-term investments, long-term debt is there. What's my total debt? Total debt, $5 billion. So they can pay off all their debt immediately. Very good. So let's take a look at this guy and kind of build a valuation from the ground up. I haven't looked at this company in a long time. I was an Amazon stockholder and I sold Amazon in late 23. So I don't like buying too many of the same stocks, but I think that's what created a little bit of my blind spot with this company is I was happy with Amazon. It went up nicely. I sold it at a profit, and maybe I can buy this one now. We'll see. Let's take a look. All right, so Mercadolibre. I do speak Spanish, so I'm going to start pronouncing it like I was taught to. All right, so we got Amazon right here. Amazon, I believe right now is priced a little too high, and it's a great company. So do millions of people agree with that statement. And we got Meli, which is Mercado Libre. So Mercado Libre has a good balance sheet. I'll leave it at 8% just from a comparability standpoint. We saw that their trailing 12 months of free cash flow was, I think, 5.2 CapEx, 5.2 billion, correct? 5 billion $227 million. Now, when we look at the growth rate, I'm going to add some numbers and I'm going to play with growth rates. So their cash on the balance sheet was $6,250 million. And then we have debt was total debt, $5,305 million. See how we got to an equity value of 162. When I do that back of the envelope, kind of like quick factoring, I've played with this model so many times that, you know, I could kind of guess at a number. And that's when I talk on the live streams, I kind of guess at the number and say, is this thing going to kind of show a discount? Should I invest more time in it? That's why I do that. So they have shares outstanding, not a lot of shares, which is good. So that's 50.7 million. And their stock price is, so it's a 95% discount. If we look at, well, let's take a look at the growth rates. I haven't updated growth rates. So I grow my cash forecast, right? How fast is cash going to grow? They're growing their top line revenue by 36%. So are they going to grow cash by 36%? No, I can't go that high. 15% is a pretty good number, but I'm going to go to 20 for the first 4 years. And then long-term growth, where's that number? Here it is. So 4%, yeah, that's nice and conservative. We'll go with those numbers. And it's 119% discount based on free cash. And they may not have enough earnings per share to really use that because they're somewhat of a young company that's really growing. Let's take a look here. So it's expected they're going to do $34 per share in earnings per share. So we'll use that. And I started to use earnings per share, and because I was getting to these young companies like these that are producing really good earnings per share, but they don't have their cash kind of in order yet. And I thought that it'd be better if I started to use their earnings per share. Now, price to earnings, I had a 50 on Amazon. I'll stick to a 50 here, and I'll say they're going to grow that much quicker than Amazon. They have more room to grow. So if I combine the two, earnings per share sustains the stock price, so to speak. It's kind of close. Combine the two, I'm thinking Mercadolibre has got a 75% discount. This is a really good example here of something worth more investigation. Thanks for whoever suggested Mercadolibre. I appreciate it because I'm going to put this guy on my watch list and I am going to do deeper analysis into it. So I appreciate the suggestion. I'm going to star that one. My opinion on Mercadolibre is that it seems discounted. Now, let's talk about big factors, right? There's a lot of addressable market in Latin America. You have growing populations. You have their economies are doing quite well. Like if you look at Mexico, Colombia, Argentina, their economies are beginning to grow. And I think there's a lot of business for this company to take down there. It is also an international, diversification play. So I'm liking what I'm seeing. I'm going to take a deeper dive into that and see if I want to invest in that company. And I'll probably do a video on it too, because it looks like a really interesting company. I've never done a video on Mercadolibre. Thanks for the suggestion, whoever suggested it out there. All right, so the next company up is AST. So AST, I'm not seeing it. Maybe I noted it wrong. Whoever suggested AST, can you give me a little more information, please? I'm not finding it. Let me move on to Bristol Myers. Somebody on the live stream on ASTS. Sorry about that. Let's go back to ASTS. We're going to go back to ASTS, then I'll come back to Bristol Myers. Wow, look at that. Strong buy, but it is priced at a premium, probably because the stock price has been booming. Look at that. So these guys, AST Space Mobile, together with its subsidiaries, develops and provides access to space-based cellular broadband network for smartphones. So they use satellites, correct? Cool. Interesting. So they're having a good year, to say the least, up 221%. Now, why is that? Why are they up so much? Is it growth? So they have very little revenue. I guess they're building out their network, launching satellites, getting that in order. They have 200 million in cash, total debt. They've got about as much debt as they do cash. Okay. And they don't I don't think they cash flow. Nope. Yeah, so yeah, they're burning quite a bit of cash. So this one here, this is out of my zone. As a young man, I would probably go deeper into this one. But as an older man, you know, I like taking chances, but I like chances that have fewer risks. Now these guys, I happen to know a little bit about this. There's a company in northern San Diego. Their name is Viasat. And let me take a look at Viasat really quick. And I did follow Viasat closely, and they do exactly what we're talking about here. And they had a day of reckoning a couple years back, and the stocks just really underperformed. Now these guys are 2.5 billion. They have their satellites up into space, and one of the big problems they had was they launched really expensive, I think it was one or a series of satellites, and then to oversimplify, they went to turn them on and they didn't turn on. They didn't work. And you can't call AAA and say, go up into space and fix my satellites. It's like a big, showstopper. I think that was somewhere along this line. So you're dealing with a science, an industry that is definitely interesting, but there are risk factors there. It's like that whole investment they had, and it was, I don't know how much money they put into it. It was like a complete loss. So they had a really bad day. And the other thing I would point out is this is an interesting company, but they have competition. They have Viasat as a competitor because Viasat still provides their service. And you have Elon Musk has his company. I forgot what he calls his company, but they're trying to do, basically remote, broadband data signals. So, good luck with this. This is not in the zone that I could add a lot of value. I'm not into, pre-revenue companies and so forth. If I'm going to be into a pre-revenue company, I will be part of the company. I will be the founder or close to one of the first employees into that company, because I have to know what's going on in order to invest my capital and my time. So good luck with ASTS. All right, back to Bristol Myers. So Bristol Myers had a nice day on Friday, up 11%. It has been a stock that has been beaten down, but it has consistently been a very good dividend payer. So I know some investors really like dividend stocks, and they have a place definitely in my portfolio. Bristol Myers is one of those companies. And I haven't been an investor in Bristol Myers because I'm in Pfizer. And for a while, I was in AbbVie. They are a $100 billion market cap company. And the reason I bring this guy up is on the live stream on Thursday, I forgot who it was, but somebody said, hey, Bristol Myers wanted to talk about it. We talked about it briefly, and then they announced, and voila. It was a really good day for this company. So I think the healthcare space has a lot of upside. If we look at the max here, these guys have seen higher highs, and potentially they may get up there. If we look at looking at their revenue, trailing 12 months are growing a little bit. They are a big company. I never think of Bristol Myers as like the company, like Eli Lilly is super red hot because they have really good drugs that are treating things that are really needed right now. There's some diseases out there that Eli Lilly really helps with, and that's why they're red hot. They also have the weight loss drug that's super red hot. So Eli Lilly has really good drugs that are really hot. I don't know that Bristol Myers has that same portfolio. I know Pfizer is trying to work on their portfolio. That's why I go to Pfizer, is that they have been investing. They acquired one company that does treatments for certain cancers, and I think that has a great potential, not proven yet, but great potential. And Pfizer has a good portfolio of drugs that I like where they're headed. Pfizer has been somewhat of a underperformer over the last couple years. It had a really good run as it created the COVID vaccine. It sold, it created like $50 billion of cash on its balance sheet out of COVID. It was phenomenal. And they took that cash and acquired a company. They did good things. But since then, look at this drop in Pfizer. Holy smokes. It's almost like, and here's what I would point out is, before COVID, they were a $40 stock. Now they're a $30 stock. And keep in mind, they added like $50 billion to their balance sheet. So if anything, they should be $50 billion more valuable than where they were a $40 stock. So I'm an investor thinking there's great value here. And plus they pay a nice dividend. And if we look at their quarterly, they've been dropping revenue because of those COVID compares are really difficult. But as COVID rolls off the income statements from a comparability standpoint, you're going to see these numbers get positive. And I think the market's going to begin to feel better about Pfizer is my expectation. I hope that's the case so I can get rewarded with a good return. Let's talk about CRM, Salesforce. And Salesforce is, see here, when you look at, let's say, I'm not going to look at NVIDIA. I'm going to look at Broadcom. So Broadcom is benefiting from the data center build out. And if you look at Broadcom, it's up 66.9%, although the last month has been, the stock's been down. And when I look at the Broadcom earnings and financials, they're not growing a ton, right? So last quarter they did grow, but that's due to an acquisition. They acquired VMware. So now you're adding VMware revenue. So it wasn't organic revenue. And so when we look at Broadcom, they're benefiting from this, what's expected to be a big secular trend with the data center build out. But I study their earnings, and it's not like the data center build out is like doubling the revenue. It's growing the company to some extent, but I think it's going to be temporary. Back to Salesforce. At the same time, when like companies like Broadcom are just kind of going up and to the right, these guys are kind of getting beat up. And I'm looking at this company, I'm like, this is a good quality company. It's been a good quality company for a long time. Now I'm invested in Adobe, and that's where I'm like putting a lot of my capital. I'm invested in a couple other software companies, but man, I would say that CRM is a pretty good place to look at. If you're looking for a good software company that's probably going to be discounted, this is a good place to look at. I think this is a good company. They produce, very good cash flow, if I remember correctly. So free cash flow, I mean, look at this cash flow. If you look at $11 billion cash flow company, and if they are growing, I would say multiply times 20. You're close up to their valuation. Might have a modest discount, but it'd be interesting if you're looking for a software company to investigate and see is it a good time to buy some Salesforce. It would have been interesting to look at it when it was down here, but right now it might be a good place. I think software companies are a good place because software just keeps getting more expensive, and these guys Salesforce they sell all their software as a subscription. So this subscription just keeps renewing, and they just keep growing because They raise their prices over time, and over time, more businesses put their employees on Salesforce. So those are my comments on Salesforce. Good luck with that. So I'm going to come back to On, and I think after that I'll check the comments, and then I'll probably end the live stream. I've got a birthday party for a 2-year-old that I need to attend today. And it's my wife and I are godparents to this little boy. We got to be there. So I'm going to have to run. On Semiconductor, this is a company, I believe. Wow, look at that. I would have expected that they are participating in this whole data center build out, but look at that, 32% down. Interesting. So a $30 billion company, where do they play? So On Semiconductor provides intelligent sensing power solutions in the United States. Okay, sensing. And I'm reading this really quick. So they're tied to the automotive industry. So I would understand where their semiconductors go. What industries are they connected to? If it's automotive, automotive, it's doing okay. They're selling a lot of units. And I would also understand what other end markets do their semiconductors going to. It seems like their fundamentals look pretty attractive. A PE of 14, a forward PE of 17, that looks pretty damn good. Looking at their growth, this might be why it's being sold off, is you have flat sales followed by negative sales. Although they had a very good 22 and very good 21, they may have sold ahead and kind of, sold so much. Now, on other semiconductor stock reviews like NVIDIA and so forth, I talk about how this industry tends to be cyclical. Here it's showing up. You have boom year followed by, low growth, low growth, low growth, low growth, boom. So semiconductors tend to be like, okay, we're going to sell a bunch of stuff that has a useful life of, 5, 10, 15 years. Then when you sell all that stuff, your customer doesn't need any more stuff. So for a couple of years, they don't need any more product and the demand is soft. So that's semiconductor. And that's one of the main risk factors that I put on NVIDIA, Broadcom, anybody else. So good luck with On Semiconductor. I think they look interesting, but not exciting. I don't know that I'm, jumping into this one. I think their growth concerns me. It's kind of low growth. Their cash flow is really good during those boom years. I would research, okay, what end markets do they serve? Are there going to be some trends where those end markets are going to really take off? If that's the answer, I would dig in and do some more analysis on this company. But if nothing there exists where, hey, they're tied to an industry that's going to really take off, I don't know that this would be an investment for me. I'm currently buying into Intel. It's and the reason I'm buying into Intel is that the PC sales have been improving. Hewlett Packard is another one of my investments. They're showing signs that the PC market's beginning to take off. When the PC market takes off, Intel is going to take off. Intel's been, sold off, and it's been a brutal stock for the last 5 years. So I'm thinking, okay, I got out of Broadcom, I got out of Qualcomm. I'm going to play into Intel and buy over time and average my acquisition cost on Intel. So that's a list of stocks. I'll go over UPS just very lightly because I think the only interesting thing I'll point out is they had a very bad day. Shipping went down, which is interesting that the economy, it was shown that it grew at 2.8%, but UPS their volumes are down quite a bit. Usually I use UPS as a barometer for the economy, but it might be different. It might be more concerning to stockholders, which is, hey, is Amazon shipping all their own product now? And is FedEx getting stronger and kind of taking out some of UPS's market share? Those are the questions that I would ask myself if I was a UPS investor. I ran through the valuation on UPS when they had this big drop, and I just cannot get to a discount. I actually see the stock as being sold at a premium. So I stay away from UPS right now. Maybe things will change in the future. So that's where we're at. Thank you so much for attending. Just a quick reminder, we're going to do Okay, I have a couple of questions I'm gonna get to, and then I'll kind of close this out. So, Randy, do I invest dividends or not? So, I have multiple accounts in. I have an account that I kind of label as my income stock account. It's after tax money. I'm setting that up so that when my wife and I retire, we can live off dividends and interest off my bonds and never touch principal. That account, I do not reinvest dividends. And the reason for it is the alignment of that account is to give us cash so we can spend it and we can, live off of. Now I have the bigger side of my portfolio is where I have stocks that are just, I want them to grow and I want them to just continue to get larger. I'm not going to touch that money for a while, for at least the next 5 years. I reinvest dividends in that account. So I just want it to get bigger and bigger and bigger and bigger. So that's it. It's a double answer to you. If I want that stock to grow in overall value, reinvest. If my income portfolio, I'm aligning it to what I want out of my portfolio. In that case, for my income account, I'm going to want those dividends to spend. Okay. All right. Shadow Guy, has anyone noticed discrepancies in stock analysis? I have noticed one or two over time, and I reported it to the platform. I think the platform, what I really like is that it's simple, not a bunch of advertising. Like I go on CNBC or Yahoo and I end up getting a headache after working on it for hours, where this one's simpler and I like it. But I have reported, hey, there's a discrepancy here and there's a discrepancy there. So be aware, and no website's perfect. I found the same discrepancies on Yahoo, on CNBC, on other platforms. They somehow their data integrations, data gets crossed up a little bit. So be aware of that. I like going to the financial statements of companies, especially if it's a big investment. I go to the financials. Those have been reviewed by their management. Those are published out to the SEC. They're published out to the market. I get my cash flow from the cash flow statement. I get my cash position and total debt out of the balance sheet. I know the data is right. So I go to the income statements for that. But my initial analysis, as you've been seeing, I do on stock analysis. But thanks for pointing that out, Family Guy. So stocks that I'm closely watching. So glad to talk about that. So I'm going to start watching Mercadolibre. So that's one. But let's take a look at my watch list. So there's some companies, and I might watch them because I think they're kind of a good company that is a barometer to a space, a sector. And there's some companies that are just good opportunities. For example, I was an investor in Amazon. I'm not an investor right now. I think it's 33% overpriced. But here's a list of the companies that I'm looking at. Live Nation looked interesting, but every time I look at it, I can't convince myself that they have a similar business to like a Google or a Meta, and the whole ticketing thing. It has kind of a limited addressable market, so I can't really get overly excited. But I'm covering things on consumer services. I got Netflix. I've been in and out of Netflix over years, going back 10 years, and I've made good money on that company. Right now I'm out of Netflix, but I got into it when it had a low point, so I'm really glad that I made money on that. Tesla I watch because it's a circus. I like watching the Tesla circus. And a couple others, here's a small cap, Producio. Here's probably my favorite gaming casino stock. And it really did well for the past month, Boyd Gaming. And I talked about it on a live stream a week or two ago. And I didn't take action. I didn't buy it. I made good money on Alley, sold out of that. Got a couple Midland States Bank sold off big this week. US Bank has been doing really well this year. So for financial services, got some healthcare stocks and I'm tracking. Cigna. Harmony's been doing well. And AbbVie did really well this week. I think they had really good earnings. I'm looking at Union Pacific. Have never been able to get into that position, but maybe someday in the future. Technology, I'm tracking these stocks. Some of these stocks I've owned and now I've sold. Palo Alto got more interesting with CrowdStrike. Pretty much I made a quick 29% on CrowdStrike. I shorted the stock. They had their big mess. The stock price dropped. I continue to watch it just because I still think it's overpriced, even though it just has been hammered as of late. So this is my watch list. And I try to keep it to an interesting list, and I try to take things off. I hate having like stale companies that I'm almost blind to the information because I'm so tired of looking at them. So that's my watch list. So thanks for the question. So with that, guys, let's end it there. Thanks so much for watching. Quick reminder, tomorrow morning, we're going to do a video conference call again. And I know we're doing this live stream. I appreciate all the comments that you guys have been chatting. But tomorrow you can ask in person, and you can be on camera, off camera. You can just listen in if you'd like. That'd be fine. Just let me know. Email me and tell me what your email address, because I need that to send you an invite. And I'll put my email on the screen, and you can email me and tell me what your email address is if you'd like to attend. And last comment is we have I'm an individual value investor, and none of the stocks that I covered, I'm not recommending you buy, hold, or sell them. I'm just sharing my opinion on them. Please make your decisions carefully around your stocks, and good luck in your investing. So with that, everybody, enjoy your Saturday. Go have some fun. Remember, recharge your batteries, because next week's going to be huge, man. It's going to be a huge week. It's going to be a lot of fun. I'll try to do as many live streams as I can, especially in the afternoon after the market closes, because several of the companies, the big ones that are report after hours. And I think it'll be interesting to see that kind of happen a little more live and kind of just go back and forth on it. I might even schedule a video conference midweek. We'll see. But with that, everybody, thanks for tuning in. I really appreciate everybody's support for the community. And I'm going to post, I did post on the community page, the Discord server that I'm using. Tune into that if you'd like to engage with the community members. And we've already got like 8 to 10 different channels on there where you can, talk with your fellow investors about certain stocks and so forth. So tune into that if you're interested in that. With that, everybody, have a great Saturday. We'll see you.